LIC is all set to take charge of IDBI Bank, pumping in much needed capital to revive the lender, which has been going through a very rough patch of late. Joining me now to talk about the quarter gone by and the eventual change in ownership is a man tasked with leading the bank through these tough times. B Sriram, the MD and CEO of IDBI Bank, now joins us. Mr. Sriram, welcome to the show. Let me first start by asking you about this quarter's results. Now, the gross NPA number to begin with is at about 30-odd%. Now, I understand that it's a function of your reducing loan book size, but overall on the asset quality side, what is your outlook with respect to IDBI Bank?
Yeah, you're right. The percentages are also a factor of the denominator and the reducing corporate book. But yes, no, if you see our slippages for the year, for the quarter one was about 7,800 crores, of which one account actually took a major chunk. About 5,000 crores came from one account. And the total slippages on the corporate side was about 7,000 crores. We are quite hopeful of the remaining 800 crores in the retail that we'll be able to pull back. But it's the corporate book that is giving us problems and continuously. But yes, if you see our SMA book at the moment, we have a total SMA position of about 7,600 crores. And more so in the SMA 1 and 2, it is down to about 5,600 crores. So we are looking at least substantial reduction in the slippages as we go from quarter to quarter henceforth. And there are no such large chunky accounts that need to be managed in the future. So hopefully as we go into the future quarters, we'll find much lower slippages on the corporate side. Our retail side continues to be quite good. Our total retail portfolio is about 80,000 crores, and a structured retail portfolio of about 46,000 crores has a very good quality, and we'd like to build upon it in the quarters to come.
Right. Talking about your reducing book size, now that, as we understand it, is a function of the restrictions placed on the bank under the prompt corrective action. Now, we had filed an RTI request with the Reserve Bank, and in their response, they pointed out that one of the restrictions that has been placed on IDBI Bank is that of reducing the loan book. So, as such, it wasn't an option for IDBI Bank to reduce the high risk exposures, right?
So there are 2-3 ways. One is, of course, as I said, is try and the bank has been trying to reduce the risk-weighted assets and to make sure that the quality of assets that we hold is much better. So if you see the credit risk-weighted assets has actually come down by about 55,000 crores year on year. Also, credit risk-weighted assets now is about 87-88% as compared to about 108-109% a year ago. So this is one way in which we try and make sure that the book is better than what it was earlier. The second issue is, of course, in trying to, as soon as we are able to get some capital and try and improve the position of capital, which largely today has been going towards some retail growth and making provisions for the credit costs. We will be in a position to try and approach RBI to try and see whether some of the restrictions on the corporate side also could be reduced. But that is something that is for the future. But at the moment, yes, we need to conserve capital. We need to make sure that the risk-weighted assets go down. We also need to make sure that the opportunities given in the areas in which we can do business, largely in the retail, structured retail assets and SME, we should be able to push more efforts into those areas and try and make sure that we continue to grow.
Two questions there. Firstly, on your ability to increase your capital base. Now, the LIC deal is one thing that has been pitched as something which should take care of some of these issues. But has the RBI at any point in time indicated that a change in ownership could lead to some easing of restrictions? And secondly, what is the timeline for this deal that is being touted as an option for IDBI Bank's turnaround?
No, there has been no talk at the moment on that, because it all depends. Once post the deal happens and the situation of the bank and that scenario, we will make out a presentation or a case to try and see as to whether there is how much of an ask can we go to RBI with, and they will then probably examine and see what they can do. But at the moment, there is nothing, no discussions on that. But the second question is, of course, on the progress of the transaction. As I've been, more or less, the current status is in the public domain, and you know that the government of India has given an NOC for bringing down the stake to below 50% and letting LIC acquire its controlling stake along with promoter status, and also relinquishment by Government of India of management control. Now, all these have been conveyed to LIC, and also there are a lot of regulatory and other clearances, compliance issues that needs to be done before the deal progresses. And in that sense, it may take some time, but largely the process is on, and we are hopeful that as early as possible we will try and conclude the transactions.
Has the board, as of now, approved? The bank's board has
subject,
approved
of course, to all the regulatory compliances and all.
Right, Mr. Sriram.
You see, the matter is with the LIC now, and the LIC board will have to first take cognizance of it.
Okay, so they need to come to you with a full form plan, and then the bank's board would take it up at that discussion.
That's right.
Okay. Just to bring this conversation back to your high-risk exposures, now I looked at the analyst presentation on the bank's website, and according to that, about 30,000 odd crore worth of power sector exposure exists on the book, and nearly 10,000 crore, or a little more than that, is standard stressed. Trying to understand if this is expected to flow into the NPA category anytime soon. Also, what is the impact expected from the RBI February 12th circular, which would force some of these assets to go into NPA at the end of this month?
As I said earlier, the issue today is only in terms of what the SMA book is and what is the standard book is. All the other schemes of which we had as part of resolutions have all been withdrawn. So in that sense, I have given you a sense of the numbers of the SMA book for the bank. As far as this February 12th circular goes, as you know, we were cognizant of the fact that it is in operation since the date of February 12th, and rather than waiting for August, it was made immense sense for us to take a view as to what of these accounts and which of these accounts there could be a possibility of resolution. And in that sense, I think only the accounts which have progressed substantially are being looked into in the last couple of weeks now. The remaining actually have gone. The banks have taken note of it and probably have, for us, those accounts have already been classified. So in that sense, it's a process of 5-6 months which have gone, rather than waiting for a single day and then going ahead. The only issue is, even in the sense that where the resolutions have not gone through, filings with the NCLT, which was supposed to be post August 27th, some of them have actually been filed earlier as well, because there was no chance of any resolution in prospect.
In terms of the accounts where you expected or where you expect some deals to go through, what is your exposure there, where the resolution is in sight?
The numbers are not many. There will be about 4 or 5 accounts like that, but I don't have offhand the total exposure of these accounts.
Sure, sir. Bring your point to the CASA ratio of the bank. Now, we saw the CASA ratio dip below the December 2017 number in the June quarter. Now, since it is a stated restriction within the PCA framework to reduce your high-cost deposit base, but your CASA is also falling. So, is there anything that the bank is doing to ensure that this CASA ratio goes up further and probably reduce the large packet of high-cost deposits on the book?
CASA is an area of very great focus for us, and we are pushing all our branches to improve the quality of customer acquisition and also in terms of trying to get current account balances. If you see year on year between June last year and June this year, there has been a good increase on that. It also, in many a case, CASA depends on certain quarter issues. Like, for example, the March quarter is typically a very high quarter balances, CASA balances for many banks because of flow of certain of these accounts, the flow of money into various accounts of current and savings accounts that happen. But yes, it is a matter of huge priority for us, and we will go all out this year to try and improve the CASA balances as one of our key areas.
I would assume that the change in flow is because of the CA element of the current account element of it, because typically savings account tends to be more sticky in nature.
That's right.
Okay. Okay. Just a couple of last few questions. Firstly, on some of the restrictions that have been placed, what has the bank done to ensure that the capital base gets protected? There have been some cost-cutting measures that have been announced by the Reserve Bank of India. Just wanted to get some sense on that. And also on the non-core asset side, what is the bank expecting in the rest of this financial year?
I think both these areas the bank has done very well the last year or so, because if you see the operating costs, they have been substantially under control, and we will continue to do so in the quarters to come. On the non-core side as well, we are one of the banks who have gone aggressively and sold out a large proportion. Actually, today we don't have too much of non-core to be put on the block. But we are hoping about 400 to 500 crores of non-core will also be sold this year as part of our plan for the year, for the remaining part of the year.
Right, sir. You were appointed at the bank for a period of 3 months. Firstly, has the government indicated on any extension of this period? Also, secondly, is it likely that we will see the LIC deal close within this span of time?
There has been no discussion on that, no decision yet on my tenure. As you know, I've been appointed for 3 months. And on the LIC deal, as I said, there are regulatory compliances, clearances that needs to be gone through. So we would take it, as I said, the intent is to try and close out the transaction as early as possible. But of course, subject to everything being clear in law and order.
So it's likely to see, what, 3 to 6 months at least before this closes?
I can't put a finger to it, but yes, we would hope that we'll try to get it within 3 months or so.
All right. Thank you so much, Mr. Sriram, for joining us on this conversation, and thank you for watching.